What's going on, guys? Colt here, back with another video, and in this video I'm going to show you one of the secret ways that I have been getting amazing entries on every single one of my trades. The cool thing about what I'm about to show you is it works on any asset class, any pair that you guys want to trade, works on any time frame, and literally at any point in the day. You can trade during the Asia, New York, or London session, and this specific entry model will appear. Now, before we get started, if you guys are new to my channel, hit that subscribe button. Got a lot of content coming, good content. We're going to keep progressing and getting better. And one more thing before we get into the video, if you guys want one-on-one mentorship, you have been looking for someone that could just hold your hand for a 3 or 6 month period of time and show you step by step how they trade, now is your opportunity. I just opened up my one-on-one mentorship. I do have a couple of spots open, but the only way to apply for my mentorship is by booking a call with me below. So there is a link in the description. Go there, choose a date and time that works for you, and then me and you will get on a phone call and we'll just discuss further options and see if we're even a good fit to work with each other. Now, without further ado, let's get in my computer because I'm honestly really excited to show you guys what I have to show you. So you guys can see we are now on TradingView, and the entry model that I want to go over is a fair value gap. It's pretty common nowadays, but everyone kind of has their twist and their way of using it. So I want to kind of break down the way that I use it to help you guys out. So one thing that you guys can do, if you go to indicators and you type in Lux, Algo, and then space, fair value gap indicator, we have this indicator that you guys can get. And I would recommend getting this indicator if you are a beginner trader. Why? Because this is going to simplify things, and it's automatically going to put the fair value gap on your chart for you. So what is a fair value gap, you might be asking? A fair value gap is simply an imbalance in price. I want you guys to focus on this rectangle right here, this big green one. This is the fair value gap that we could see on our chart that played out very nicely. Now, there are other fair value gaps like this in here, but this fair value gap, it was actually retraded into versus these other ones, they realistically weren't. Well, this one right here was, and this one was as well, but not this one right here. But we're going to focus on this one because this one is really nice. So a fair value gap consists of 3 candlesticks. It's a 3 candlestick pattern, guys. So we have the first candle right here that makes a fair value gap. We have the second candle that creates the gap. And then we have the third candle that closes the gap. So realistically, let's say that we didn't have this indicator on. Now you guys can see that we have this gap right here. So the way that I would mark up this fair value gap, and one tool that I use is this little magnet, because when you use the magnet, watch when I get the rectangle. So I'll get the rectangle. I'm going to go from the first candle's high right here to the third candle's low right here, and then I'm going to extend into the future. Now, like I mentioned a second ago, the fair value gap is 1, 2, 3. It's a 3 candlestick pattern. Usually, when you're on lower time frames, you want to see the 4th, 5th, or 6th candle retrade into the fair value gap. Does that mean that it's going to happen every time? No. You guys can see right here we had the 4, 5, 6, 7, 8, 9, 10. The 10th candle came back into the fair value gap and hit it right there. So ideally, this is how you guys would set up a trade. Let's go and play it back as if we are in real time. So now we have our FVG right here. And yeah, we're on oil right now, looking at crude right now. So one thing that I like about this, I really want you guys to pay attention to what I'm going to break down, because this is like major gems. Usually when I see fair value gaps form, I like to see a trend being started or a trend has already been formed. So we can see we have been kind of consolidating throughout this range right here. We do have this low. Price failed to break this low right here. Failed to break this low right here. And look at the body of this candle that we're on that created the fair value gap, that closed it. Notice how the body of this candle engulfed the bodies in the wicks, basically the high right here. So now price is actually showing us a willingness and it wants to go up. So we do have confirmation that this could be a good potential buy. So what are we going to do? How would we set up this trade? Now, if this was in real time, what you could do is go and get a long position. And with this long position, I like to have it at the top of the fair value gap right here. Now, you could have an entry down here at the middle of the fair value gap or even at the bottom. But most of the time, I find that price just goes and hits the top of the fair value gap. It does hit the middle part some of the time, but most of the time, you just want it to hit the top of the fair value gap. Now, one thing that I love about these fair value gaps that makes it so simple to trade is when we're using our stop loss, all you're doing is putting your stop loss below or above the first candle that makes a fair value gap. So since we see a bullish fair value gap right here, we're looking to go long, our stops will be below the first candle that makes a fair value gap right here. And ladies and gentlemen, this is going to be the same for every single trade. Your stop loss is always going to be below the first candle of the fair value gap for a bullish fair value gap, and then below the first candle for a bearish fair value gap. So let's go and find a bearish fair value gap real quick so you guys can see. So we do have one right in here. Boom. Okay, so what are we going to do? 1, 2, 3 candles. If we were to go into a short position, what we would do is put a short position right here at the bottom of the rectangle. Our stop loss would be right above the first candle that makes a fair value gap. And then for your TP, you could target previous lows. You can zoom out a little bit more and you can see this low down here. That would be a great target. And boom, that's how this trade would have played out right here for a bearish fair value gap. So now let's bring our focus back into here. We now have our trade set up. This is our position. What we would want to do is figure out our take profit. So a lot of the time with my take profit, I'm aiming for previous lows or previous highs, usually trying to find and get at least a 2-to-1 risk to reward ratio. So this is our trade right here set up. So what we could do now is, imagine this was in real time, we could go and create order. Okay, I can't do it on replay mode, but ideally what we would want to happen is we would want price to come down here, and then we would want price to hit our FEG and move to the upside. So let's see what happens. Let's see if it goes and hits our TP or at least gets close to it. And trace hit right there. And then you can see price moves away very aggressively. So the way that I think of a fair value gap is kind of like a trampoline. When you jump into the air off the trampoline, you hit the trampoline with expectations of going higher than you did the previous time when you first jumped up. So it's like we're jumping up, hit the FEG, and then boom, we go and smash our take profit. And I know some of you are probably looking at this, you're like, okay, Colt, so it did hit the top of our rectangle on this trade, but it also did go and hit the middle part of our fair value gap. Yeah, what you could do is you could add more positions. So you could have positions that are being hit, or you could add positions as it hits the top of the fair value gap, but also you could have positions that are being added as it hits the middle of the fair value gap as well. So that's a little trick right there. So let's go and look at a couple more examples. Bring this replay mode off. Kind of want to go to like NQ today. So here's a very nice example once again. What do we have? We have our FEG right in here that's traded. Okay, and I think it did it perfectly on this trade. So we have 1, 2, 3, 4, 5, 6. Notice how the 6th candle hits the FEG. It hits the top, the middle, and the bottom of it. Now, once again, if we were to go into a trade right here, guys, this is how we would set it up. What would we do? What would we do? Have our long position set right here. Stop loss right below the first candle that makes a fair value gap. And then we could aim for previous highs right here. Or we could even like go up more if we wanted and aim for highs all the way up here. That's a crazy risk to reward ratio. I think what I would do is just aim for these highs right in here, expecting price to break it. And you can see it just goes up and hits it to a T flawlessly. So guys, this is like how you use a fair value gap. If you want more in-depth help, like I said, the mentorship is the way to go, guys. You need that one-on-one mentorship. And we have 3 and 6 month plans. So if you guys want, click the link below, book a call, we'll talk and see if you're a good fit. And guys, I'll see you on the next video. Peace.